In 2009, the world was reeling from a global financial crisis. In the midst of that chaos, an anonymous entity named Satoshi Nakamoto released a white paper that would change history. It proposed Bitcoin, a peer-to-peer electronic cash system. Bitcoin wasn't just a new currency. It was a declaration of independence from centralized banking. For the first time, humans could own and transfer value globally without a trusted third party like a bank or a government. Today, we're going to dive deep into the top 0.1% of this industry, the projects that actually have the tech, the community, and the staying power to redefine our future. 1. Bitcoin, BTC. The digital gold standard. Bitcoin is the undisputed king. It uses a technology called blockchain, a distributed ledger that is immutable, meaning once a transaction is written, it cannot be erased or changed. How mining works. New Bitcoins are born through proof of work, POW. Imagine millions of specialized computers called ASICs around the world racing to guess a 64-digit hexadecimal number. The first one to find it gets to verify the next block of transactions and receives a block reward in BTC. The halving and scarcity. Every 4 years, an event called the halving occurs, where the amount of new Bitcoin created is cut in half. This is why Bitcoin is deflationary. While central banks can print unlimited dollars, there will only ever be 21 million Bitcoin. This absolute scarcity is why institutional giants like BlackRock and Fidelity now treat it as a legitimate reserve asset. The pizza story revisited. In 2010, Laszlo Hanyecz bought 2 Papa John's pizzas for 10,000 BTC. At the time, that was worth $40. Today, those pizzas would be worth over $700 million. It remains the most expensive meal in human history and serves as a reminder of why many now hodl rather than spend. 2. Ethereum, ETH, the programmable revolution. If Bitcoin is digital gold, Ethereum is digital oil, the fuel that powers an entire ecosystem of applications. Launched in 2015 by Vitalik Buterin, Ethereum introduced smart contracts. What is a smart contract? Think of a traditional contract. You need a lawyer, a notary, and a court to enforce it. A smart contract is just code. It says, if X happens, then execute Y. This allows for decentralized insurance, lending, and even voting systems that can't be rigged. The merge and proof of stake. In September 2022, Ethereum completed the merge. It moved from the energy-heavy mining system, POW, to proof of stake, POS. Instead of using electricity to secure the network, users stake their ETH. This reduced the network's energy consumption by 99.95%, making it an ESG-friendly institutional favorite. The uprising of L2s. Because Ethereum can be slow and expensive, gas fees, Layer 2 networks like Arbitrum and Optimism have been built on top of it. They handle the heavy lifting and then settle the final data on the main Ethereum chain, making the ecosystem scalable for millions of users. 3. Solana, SOL, the speed demon. Solana was built for one thing: extreme performance. While Ethereum was designed to be decentralized and secure first, Solana founder Anatoly Yakovenko wanted a blockchain that could compete with the Nasdaq Stock Exchange in terms of speed. Proof of history, POH. Solana's secret sauce is proof of history. Most blockchains require nodes to talk to each other to agree on when a transaction happened. Solana creates a historical record that proves a transaction occurred at a specific moment in time. This allows nodes to process transactions without waiting for the whole network to sync up first. The ecosystem. Solana has become the home for high-frequency trading and meme coin culture. Because fees are usually less than $0.01, it is the most accessible chain for retail users. Despite some early network outages, the tech has matured significantly, proving it can handle massive surges in volume that would crash other chains. BNB, the utility giant. BNB, formerly Binance Coin, is a fascinating case study on how a company can build a decentralized empire. It started as an ERC20 token on Ethereum to fund the Binance exchange, but migrated to its own chain, the BNB Smart Chain. The burn mechanism. Binance uses a portion of its profits to burn BNB every quarter. They literally send tokens to a dead wallet address, removing them from circulation forever. This creates constant buy pressure and rewards long-term holders. Real-world use cases. BNB isn't just for trading. You can use it to book flights on Trivala,
pay for goods via Binance Pay, or participate in launchpads where you get early access to new crypto startups. It's essentially a loyalty program mixed with a high-performance blockchain. The stablecoin duo, USDT and USDC. In a world where Bitcoin can drop 10% in an hour, we need stability. Enter stablecoins. These are tokens pegged one-to-one to the US dollar. Tether USDT, the old guard. Tether is the lifeblood of the offshore crypto market. It is primarily backed by US treasuries and cash equivalents. Despite years of FUD, fear, uncertainty, and doubt about its reserves, it has survived every market crash and remains the most liquid asset in the space. USDC, the regulated rival. Issued by Circle, USDC is the preferred choice for US-based institutions. It is fully audited and holds its reserves in US banks, making it the safe choice for those worried about regulatory compliance. XRP, the global bridge. XRP is often misunderstood. While most crypto enthusiasts want to destroy the banking system, Ripple, the company behind XRP, wants to upgrade it. The Swift killer. Currently, sending money from New York to Tokyo via the Swift network takes days and costs a fortune in fees. XRP acts as a bridge currency. A bank can convert USD to XRP, send the XRP instantly, 3 to 5 seconds, and convert it to JPY on the other side. The SEC battle. XRP spent years in a legal deadlock with the SEC. In 2023, a judge ruled that XRP is not a security when sold on public exchanges. This was a landmark victory not just for XRP, but for the entire crypto industry, providing the legal clarity needed for banks to start using the tech again. Dogecoin, DOGE, the power of community. Many people dismiss Dogecoin as a meme. But in crypto, attention is the ultimate currency. Dogecoin has survived since 2013, which is longer than most serious projects. Why it matters? Dogecoin has no CEO and no fancy smart contracts. It is pure, decentralized money. Its value comes from its massive community and its infinite supply. It adds 5 billion coins a year. While that sounds bad for price, it actually makes it a better currency for tipping and small payments because people aren't afraid to spend it. The Elon factor. Elon Musk's support for Dogecoin isn't just for memes. He has hinted at integrating it into X, formerly Twitter, for payments. If Doge becomes the currency of the internet, its joke coin status will be a thing of the past. Cardano, ADA, the academic turtle. Cardano is the scientist of the group. Founded by Charles Hoskinson, it doesn't release features until they have been peer-reviewed by academics and researchers. Liquid staking. Cardano has one of the best staking systems in the world. Unlike Ethereum, where your coins are locked up when you stake them, Cardano allows liquid staking. You earn rewards while still being able to move your ADA whenever you want. Global identity. Cardano's RealFi initiative is focused on the developing world. By partnering with governments in Africa, they are creating blockchain-based IDs and land registries, proving that crypto can solve problems for the 2 billion people who are unbanked. Chainlink, Link, the truth machine. Blockchains are walled gardens. They have no idea what's happening in the outside world. If a smart contract needs to know the price of gold or the weather in London, it can't just Google it. The Oracle Network. Chainlink provides oracles. It gathers data from thousands of sources, verifies it, and feeds it to the blockchain. Almost every major DeFi app like Aave or Uniswap relies on Chainlink to function. Without Link, the smart in smart contracts wouldn't exist. Toncoin. Mass adoption. Toncoin is the sleeper hit of 2024 to 2026. Originally developed by the Durov brothers, creators of Telegram, it was designed to handle billions of users. The Telegram integration. Telegram is the home of crypto. By integrating a Tron wallet directly into the app, they have turned 900 million users into potential crypto holders. Overnight, you can send Tron to a contact as easily as sending a photo. This is the closest we have come to a crypto-native social network. Tron, TRX, the entertainment hub. Tron was founded by Justin Sun with the goal of decentralizing the web. While it is often criticized for its marketing tactics, the numbers don't lie. The USDT king. Surprisingly, most of the world's USDT actually moves on the Tron network, not Ethereum. Why? Because it's faster and cheaper. Tron has carved out a massive niche in the Asian and South American markets as the primary rail for stablecoin transfers. Understanding the difference between utility and governance. Before you invest or use these coins, you must understand what you're holding. Utility coins like SOL, ETH, BNB are like tickets to use a service. You need ETH to pay for transactions on Ethereum. Governance tokens like UNI and LDO are like shares in a company.
They allow you to vote on how the project is run, what the fees should be, and which new features should be added. Market dynamics, how they move together. The crypto market is highly correlated. Usually, Bitcoin leads the way. When Bitcoin goes up, altcoins, everything else, tend to follow. However, we are now entering the decoupling era. We are seeing coins like Solana or Toncoin move independently based on their own ecosystem news. This is a sign that the market is maturing. It's no longer just a gambling den. It's a legitimate tech sector. Conclusion: the top 0.1%. We've covered everything from the digital gold of Bitcoin to the oracle of Chainlink. The 10,000 other coins out there? Most will be gone in 5 years, but the projects we discussed today represent the infrastructure of the new digital economy. Crypto is volatile, it's exciting, and it's occasionally scary, but it is undoubtedly the future of how we interact with value. If you found this guide helpful, make sure to like this video, subscribe to the channel, and let me know in the comments which of these coins do you think will be the top performer by 2030.